Gold has been consolidating ever since the beginning of May, well, mid-April really, but one metal in particular has been soaring under the radar, perhaps, of mainstream investors. Silver climbed more than 10% in just a week and a half since the beginning of June. What's next for the precious metals? What's next for the economy? What are these metals signaling for the economy? Gary Wagner is here to break down these topics for us. He is the editor of thegoldforecast.com. Welcome back to the show, Gary. Always good to have your timely insights.
Thanks so much for having me. And we do have an interesting dilemma right now in gold, and silver has caught a lot of people by surprise. So it's going to be an interesting couple of months ahead.
What is happening with silver right now? Let's start with the metal that's moved the most. Like I said in the introduction, jumped up tremendously over the last week and a half, 2 weeks almost. And it doesn't happen all that often for silver, at least not when gold is just trading sideways. Why this huge divergence in June?
Well, to answer the question of why there's a divergence, there's a couple of theories, but what's really important to note is, as you correctly said, we've seen gold hit multiple all-time record highs. At the same time, silver was extremely range bound, capping out at around $33, $34 and trading within that narrow range. And just a week or so ago, it caught everybody by surprise in that we started to see silver moving, with gold kind of being caught or trapped within a defined range. One of the theories that, and it's the one that I happen to believe the most, is that because gold isn't hardly trending to the upside the way we've seen it trend, some traders switch to silver and move the precious silver price higher. That's one theory, but what I can tell you is we're currently at prices that we haven't seen since 2012, and that's interesting.
What's gold doing though right now? Gold is trading range bound. It's been beating the S&P 500 all year, but interestingly, ever since the beginning of May, ever since after Liberation Day, the stock market's
Right.
been recovering from their drop, but gold's just been trailing sideways. So, is this the end of the bull run for gold, at least for now?
It's possible, but I don't believe it's in the card, so to speak. Look at it this way. When we think about what happened after Liberation Day, it went down for a little bit as the equities did, but then gold popped. In fact, it popped from about $3,000 per ounce, and in under 2 weeks, and I'm addressing the futures contract, but spot silver did the same thing. It spot silver went to 3,500, futures went above that. So you had a $500 move in a short period of time. And then from there, we've had a series of the market coming down, forming a low and then a lower high. And as you'll see when we look at some charts, it can be identified as a compression triangle that has an interesting outcome that we'll talk about when we pull up some charts.
Yeah. Okay. Well, what's been the primary driver of gold then of late, in the last month and a half at least? I know that tariffs and geopolitical uncertainty were the theme earlier in the year. What about now?
They still are. Those are at the forefront, and the trade negotiations. I mean, the shock of the tariffs has kind of worn off, but now realize we had an announcement very recently by Trump that they've come to a tentative agreement by the Chinese and the United States negotiators in London. However, gold went up $24. What that tells me is until we see it inked, until we see, it's not unusual for President Trump to be overly optimistic. I hope what he's saying is absolutely correct, but
Yeah.
there's not enough information out yet for us to say, you know what, we did it. We have a negotiation. Now we have trade parameters with China. They're our largest trading partner. We're the two largest economies in the world. And for us to be at odds with these tariffs and reciprocal tariffs, that creates immense uncertainty. Now, once that agreement's reached and we see where the tariffs go to, which in China are currently at 30%, we'll have a better idea. But if they remain elevated and there will be some tariffs, the question becomes what kind of inflationary pressures will we see down the road? There's going to be a tremendous lag. It's going to take a couple of months if there's going to be a big uptick because of the change in prices to consumers. But we don't know that yet. And when we looked at the latest CPI report, inflation's actually cooling. That creates a lot of uncertainty. And when you get uncertainty, that supports gold prices. So even though Trump came out with an announcement that they've reached an agreement, the fact that gold went up tells us that the bulk of traders aren't convinced that this is etched in stone, the deal is inked, so to speak.
Let me give you a statement, Gary, and feel free to agree or disagree with me. Given everything you've said about Trump and the trade deal that supposedly, by the way, today's news supposedly was reached with China, if I were a gold investor, I would say, well, gold's been reacting to uncertainty. Now that we have more certainty, now that Trump has taken a lot of tears off the table, now that he's reached an agreement with China, it's time to sell some gold and take profits because markets are a little more calm. We have a little more certainty. Gold does well during uncertainty. How would you respond to that?
Well, I would add one variable that we haven't even added into the mix, and that's dollar weakness. The dollar has come down since the beginning of the year at 110 on the dollar index. It broke below 100. It's at a critical area that if it trades down, I think it's 98, but if it breaks below that, it could sink another 4 to 5% over the year. And realize you've got a 100% relationship because gold's paired against the dollar. What I would say is that those who believe it's time to sell gold, be cautious about it because we have to understand that the dollar's coming down for some real reasons that are still wrapped into the economic scenario. And if the dollar will pop back up, that's another thing. But I think it's more reasonable to expect the dollar to continue to at least trade sideways or lower. And so, for that reason, I would caution selling into gold right now. I don't expect it to pop like it has. What we saw, 25% gains from the first part of the year in gold, beating really all the indices. But don't count gold out, especially if the dollar remains weak.
Your personal information is probably online right now. Your full name, home address, and phone number sitting on data broker websites that anybody can access or buy. It's uncomfortable, but also avoidable. That's why I use today's sponsor, Delete Me. They remove your private information from hundreds of data broker sites, so it's not just floating out there for anyone to grab. Getting started is simple. Submit your info, and within a week, you'll get a privacy report showing exactly where your data was found and what was removed. Delete Me doesn't stop there, and it continues scanning and deleting your data throughout the year. I trust this tool. It's helped me keep control of something that's easy to lose track of, my personal information. Go to joindeleteme.com/DavidLynn, link down below, or scan the QR code here and use the promo code DavidLynn at checkout. Get 20% off of all U.S. plans. Today, join Delete Me and take back control of your privacy now. Okay, well, you mentioned inflation. Are you seeing any evidence of inflation, at least where you're in Hawaii?
Hawaii's an odd place to gauge it because we have inflationary pressures just for the transport costs. We don't if we don't produce it, we've got to bring it in by boat. So prices are always elevated compared to the rest of the mainland. Personally, I have seen prices go up considerably when it comes down to meats and just food staples and that, a gallon of milk, things like that. I have seen that unquestionably. But then there's also the fact that we've got energy costs really relatively inexpensive. I mean, it was right around $60 per barrel, and that's kind of keeping things in check too, because so much of inflationary pressures are directly tied to the price of oil. Because regardless of whether you use oil to make a product, you got to ship it. And if you have to ship it, how do you ship it? Whether it's by cargo plane, by ships, by trucks, all of those use oil. So with oil being relatively inexpensive compared to other times, that's you've got these push-pull scenarios. So I have seen inflation in Hawaii to answer your question, absolutely. But according to the latest reports for the last couple of months, inflation is either remaining the same or ticking down. I'm not seeing that. But then I'm not sensitive to when I go to buy a gallon of milk, if it's $9 or $8.70, I don't really, it doesn't register in my head. But I do know that it has been kind of remaining steady and hasn't really surged to the upside like some analysts projected would happen with these tariffs.
Yeah, well, today is the date of the CPI release. We're speaking on Wednesday, the 11th of June. Consumer prices rose less than expected for May. Prices rose 0.1% for the month. The annual inflation rate is at now 2.4%, which is slightly higher by zero point 0.1 percentage point from the previous month on an annualized basis, but still less than expected. Economists surveyed by Dow Jones were looking for 2.4%. So the annual rate is in line with expectations. Why don't you think the inflation numbers are reflecting any price increases from tariffs if they've actually been realized, Gary? Is it just a matter of the lag? Is it a counting issue? Or like, you and I have discussed in the past, last time we had tariffs in the Trump administration for term one, nothing happened with the CPI.
Yeah, we are seeing a similarity to his the last time he did that, of course, his first presidency. What's important to me is there is always going to be a pretty tremendously large lag between the implementation of tariffs and seeing the products move not dramatically, but substantially higher. That usually will, to get through the supply chain, you're looking at 30 to 60 days, number one. Secondly, we've got a lot of, most of the countries have this 90-day thing that's going to come off. I don't know if it's been today or if it's coming up soon. And from there, we would have to see over the next month if we start to see that tick up. And most importantly, whether or not the United States, as they stated when they put these high tariffs, elevated tariffs on, whether they can negotiate favorable trade agreements and end the conflict between various countries, especially with our best trading partners, not our largest, but Canada, as well as to the south, Mexico, because we've got this special relationship, and there's not really good blood, let's say, between the two countries because of these actions, and those need to be taken out and smoothed out. We don't know what the outcome of that is yet, which is uncertainty, which is why I see gold remaining elevated, maybe not moving higher and higher. But when I say elevated, it's a couple dollars shy of $3,400 an
Yeah.
ounce. My God,
Yeah.
that's not gold at a low price.
I'm going to get to technicals for gold and silver in just a bit, but let's finish off on the economy. The Federal Reserve is set to announce a rate decision next week. What do you think they'll do in light of this week's CPI data? And of course, the unemployment rate we have to discuss as well. Factoring in these variables, what do you think they'll do?
The one thing we want to watch for sensitivity is the labor market because we have seen some interesting things pop up in the most recent reports. But according to the Fed Watch tool, which has always been a solid indicator of whether or not the Fed will cut rates at the FOMC meeting on the 18th, it's near zero. They deem it highly unlikely. The thing is that as you said, we're at 2.4% in terms of annual inflation.
Yes.
The Fed's target is 2%. So are they going to rush to cut rates when they're still almost a 0.5% above what their goal is, which is to get inflation to 2%? The dual mandate of the Federal Reserve is controlling prices and having maximum employment. And the maximum employment, that is something that could change that whole equation because there's been reported reports of a lot of layoffs as well as shortages in hiring. And because it's a dual mandate by the Fed, why they still have a ways to go on their target for inflation, if they believe that the labor scenario is not favorable and they need to boost that up, the tool they use is cutting rates. And so that's where we've got to watch it. It's going to be labor that would be, I think, a decisive factor as to when they cut it and how they handle their monetary policy throughout the remainder of the year. But right now, I don't foresee a rate cut at the June FOMC meeting.
So let's take a look at a gold technical chart now, Gary. So $3,400 was kind of a resistance level. We're currently at 33.74. What is gold waiting for right now? Is it going to be breaking out to the upside or downside? Is what investors are curious to know.
All right. Well, I'm going to look at a couple of different charts. I just want to verify that I did
Yep,
properly get it on the screen.
we see it.
If so, correct? So we're looking at a daily chart standard candlestick format of gold futures, continuous contract, now reflecting the August contract. And this green line here represents a 50-day moving average. 50-day moving average, simply put, it's a golden rule for us technical analysts. A stock or commodity above the 50-day moving average is in a bullish short-term trend. It's not sideways, it's bullish. Below it is bearish. And we use that, and we use for the longest term 200-day, and we use 100-day. But as you can see, at the beginning of January, gold broke back up above that. And from there, it has maintained a status of being above the 50-day moving average, really for the entire year. Now, the other thing you want to look at is how close or far it is. So immediately there was some real width between current pricing and the 50-day, with the pricing being well above that. If you look at right now, what we are seeing is that it is still above it, but it challenged it back in the middle of May, where you had some lows that broke below it, but not an open or closing price. So we're looking at that. The other thing is, this is a basic Fibonacci retracement. This line here with these two blacks, the bottom one is the lower level around 3,000 and then 3,500. And so what we're going to use that data for is really to discuss major and minor levels of support. And so major support, which corresponds to these lows mid-May, was the 61.8% Fibonacci retracement. So we had an absolute correction right here. After going parabolic, we would look at this as an A, B, C correction. So in Elliott wave count, we're back into a bullish momentum or a wave one. That tells you that all things being equal, if Elliott wave carries some real validity in it, we should see higher prices unless it breaks below certain things. The first level of support is right at around 33.30. That's the 38.2% fib retracement level. And you've had gold go into, open above, or close below. It's not been solid, but as of really Monday, June 9th, real recently, it's now trading above it and moving past that point. And then 50%, I'm not giving that much credence. So when you take that all into consideration, excuse me, that bodes well. It tells you that we are still looking at a bullish market, certainly not near the all-time record highs of 3,500, but realistically, the highs are based upon, this is the highest closing price in history for gold futures, right around 34.40, 34.70. And so that's the target, the upside target. This next gold chart we'll look at, it looks at something a little bit different. It does have the fib retracement, but we've identified a compression triangle based on the price ratio between these lows at 3,000 and 3,500. And so what we've gotten is lower highs, higher lows. That's how you create that compression triangle. We did get a breakout above the upper level line back on June 2nd. And since that time, it has stayed above that particular area. But this isn't the kind of breakout we would typically look for a compression triangle, because typically what we look for as you get a series of lower highs and higher lows, as it reaches the apex and it breaks, it releases energy and you get this big clip up. We're not seeing that. In other words, we had a solid day. I believe this was, well, let's just verify what this was. But this was an $81 day. And then from there, it remained elevated, but now has been coming down. And that tells me that people are bullish, but they're not nearly as bullish as they have been. And so for that reason, a break below this trend line here, or call it 3,300, will not bode well for a bullish demeanor. But as long as it remains above the 50-day moving average, which is currently at 33, call it 3308, 3,305 to 3,310. As long as it remains above that price point on a technical level, it is still bullish. So that is my assessment for gold. In terms of upside targets, 3440 is resistance. And of course, 3,500 absolute major resistance. Support begins at 3,300. And with major support, believe it or not, down at around 3,200 because we've seen this, it was a $500 range between April the 4th and April the 21st. So in about under 3 weeks. And so that's what we want to see. And that is not going to be contingent on technicals. That's going to be contingent on the fundamental events as they work through the cycle. And a lot of it has to do with the trade negotiations because Trump has already stated he's doing tariffs. He wants to kind of even the playing field. Now, what are the trade agreements that will be reached? Because from my understanding, very few have been inked. And that's where we're going to see something happen.
So somebody watching this may think, well, I haven't gone into gold yet. I don't know if I should get in now. It's already run up so much since last year, basically 50% in the year, which is almost unprecedented for gold. Is it too late to get in? Should I wait for a major pullback? How would you answer that?
Well, if they've been accumulating, they want to slow down the
Let's say I have
accumulation.
no gold
Okay,
and I'm
if you
just
have no
interested.
gold, you
Yeah.
want to be very, you'd want to be very, very cautious. And if your allocation, let's say, is we'll call it 1 point, the $100,
Hmm.
just so we can break it down, right? You don't want to put that $100 into buying gold. You might want to put 25 so that you can dollar cost average if it does come down. You can dollar cost average if it moves up. And of course, you would have been better off putting the bulk, buying it now. So my simple answer is, should they buy it? Yes, but they should buy it with much more caution and a layered or scaling in or out plan rather than just allocating. But by all means, I mean, the last bulk of gold that I bought was at about 1,500 an ounce, but I'm still looking at buying incremental amounts. The same thing with silver. I was buying a lot of it at $30 and I kind of forgot about it. Now it's at 36, so I'm trying to see where it's going to go. Don't ever count the precious metals out, regardless of tariffs, regardless of geopolitical considerations. As long as the dollar remains weak and it has the potential to move lower, gold and silver will move higher. And that's the key right now.
Okay. Is there a critical support level below which you would be selling gold?
Major support's at around 3,200. It's at 3,340. A break below that would first break below the 50-day moving average. It would break through recent lows. The lowest low that we had after the big clip from 3,000 to 3,500, it went to 3,123. A break below 3,100, and that could easily signal that we have moved from a bullish market that slowed down to the beginning of a bear market because obviously at some point gold will react the other way. We saw that in 2011 to the middle of 2011, where we saw it run up tremendously, from 1,000 up to the all-time record high, then just above 1,900.
Mhm.
And just as everyone thought 1,900, 2,000 is the next move, it began to sell off. And first it went between 1,800 and 1,900. Then it broke to 1,535. And once it broke below that, we had a multi 5 year deep correction in gold, not finding support till $1,000 per ounce. And that was in February 2015. So could it go lower? Yeah, absolutely. I've seen it happen before when I didn't expect it. Fool me once. That's that potential not only is possible, I believe at some point we will see gold have a realistic sizable correction.
What does that
What
mean?
would keep what that means is that as fast and as high as it's moved up, where it's in essence doubled from the beginning of the year. If we take a look at
Yeah.
what prices were in
In 20,
it was $2,600 at the beginning of this year. Half year later, it's at 3,300. At the point where things either dollar strength, trade issues are resolved, you will get a correction. In other words, on a technical basis, I can't tell you what price point that would happen. It will be based on a shift in fundamental events. And if and when those occur, you could see a real sizable price correction in gold. Considering that it has moved up $900 in about a year, what kind of correction could you expect? Anywhere between 300 and $700 on the way down to make up for this huge move up. But again, that's not going to be based on it breaking through a certain price level. That's going to be based on a real shift in the fundamental environment, the tariffs, what happens in terms of inflation, the geopolitical tensions to some degree, but a lesser degree, and dollar strength or weakness. Those are the three most important variables. The last one being interest rate cuts by the Fed.
Mhm. So
That's what's going to move the needle.
we're not, I mean, those are pretty big macro tectonic shifts. We're not looking at a 1 day trigger. We're looking at sort of a multi-week, if not multi-month correction if those things start to change in those directions, right? Is that what you're saying?
Correct. Absolutely correct.
Okay.
Yes.
It's not like gold is going to drop $700 in 2 days, for just for the viewers understanding
No,
this. Okay.
no, not by any means. And I'm not sure it will. What I'm saying
Yeah.
is that when you have, so for example, when we had gold move in a series of 3 weeks from 3,000 to 3,500, that kind of move was just unsustainable. And it quickly came down to about 3,180, 61.8% correction. In a bull market, a deep correction of 61%
Yeah.
is still an acceptable level as long as it recovers. If it breaks below that to 78 or below the actual beginning or the start, which would have been around 3,000, that's a sign that things have changed. You're always going to get those stair steps, whether you define it through Elliott wave or through simple Fibonacci retracements. A market that goes up parabolically fast will have a hard down, even if it's still extremely bullish. The institutional investors, the hedge funds, they're going to pull profits at the top, and then they'll look to re-enter after that correction, even if they are extremely bullish on the price of gold in the future.
I started interviewing you in this space 5 years ago, Gary. What is it, 2025? Yeah, about 5 years ago. And back then, I'm just looking at a chart. Believe it or not, when I first started working with you, we were looking at $1,400 gold. It's literally run up more than 100% since I started working with you, Gary.
Yep.
I mean, those were the days. And now we're talking about, oh, retracing back to $3,200. Can you imagine having that language in 2020? I mean, if you just zoom back and look at a bigger time frame, Gary, this gold chart looks like a tech stock. Are you just, how do you feel right now? I think this is a very untechnical question, but how do you feel right now trading gold in the post 2025 environment, above $3,300 an ounce versus 5 years ago when it was still sub $1,600 an ounce? I mean, is it the same level of enthusiasm, or are you still as bullish? Are you still as optimistic? Are you feeling a little more frothy now? Anxious?
Well, you have to say, Frost, I mean, as you correctly pointed out, 5 years ago when we were looking at, and I'll just try to run this one chart back so we can see what levels you're talking about.
Yeah.
1,600 is bad. This is 2022. And if you go back to 2019 and 2018, it was $1,200. When we were looking at $1,200 or $1,500 gold, I don't think I know I didn't foresee this kind of an upward move. I don't know many that did. Those that did got it right. No, I'm absolutely amazed. If you look at the course of gold from even 2018, it tops out at 2000. It then goes back to 1600 in 2022. It's 2022 to now that is most impressive because a $1,600 move to 3,300, so in essence, a doubling of price occurred really, really what in just a short period of time, 3 years. So am I as enthusiastic that we'll see it go from 3,300 to 4,500? No. My year-end call right now is between 36 and $3,700 for gold. 36 more based on spot, and then futures closer to 37,
Mhm.
unless one of these fundamental events that we've talked about, if there's that big shift. Because if there is that big shift, that changes everything. And we can't, or I can't predict
Well,
if and when those events will occur. And I have to be sensitive to the fact that that would change the environment completely. So I am a little bit more frothy or frosty, let's say, in
yeah.
terms of the upside potential, but I still believe there is upside potential in gold, much more limited to what we've recently seen. And I will acknowledge that, for example, the move we saw uh, just in 3 weeks from the beginning of April, April 7th, so a few days after Independence Day, up to April 21st, in which gold gained $500, went from 3,000 to 3,500. We'd seen it moving up, but nothing that to me is a parabolic move. Once I saw it move parabolic and hit 3,500 unsustainably intraday, it told me that we could still see it be bullish, but we're going to see some sort of correction. So it's a good point to re-enter, to resize and stuff like that. Right now, it's remaining pretty solid, but this is the first time we've actually
Okay.
seen gold go from a trending to a sideways trading.
Is there a narrative that would push gold to $5,000? Just the reverse of what you've just said, or even $4,000, right? You talked about a what, regime shift or, narrative shift. What would be the extreme bull case?
I mean, there are narratives. I don't think any of them are really plausible.
All right.
But in terms of, massive conflict, incredible inflation, a total breakdown in trade policies
Mhm.
between countries, things that I pray and hope will not happen, that would be the narrative to push it to $4,000 or $5,000.
Okay.
I'm hoping that doesn't occur, but again, black swan events are called black swans for one reason. No one can predict they're going to happen, but we would need a black swan event for that kind of price rise to occur.
I understand. Let's take a look at silver now before we close out the conversation.
Oh,
Yeah, yeah, you're
yes,
ready for that. Hey, let's pull up
absolutely.
a silver chart. Same question. I'm looking at this chart, and if I were a silver investor, I'd be taking profits. I am not a silver investor, full disclosure, but if I were to get into silver, I would be curious to see first of all, what happened in the last month and whether or not, and second part of the question, whether or not this is sustainable, because this looks like another one of those runs where I'm late to the party.
Well, I mean, look at we breached very shortly $37 per ounce. Now, the analogous move in gold was gold moving to 3,500. What happened? It came down. But that was gold at an all-time record high. It had no history above that. I believe that if the market continues to move higher, as you correctly pointed out, first it's got to sustainably trade above 3,700 and remain there. And if it does, I look at this price point in February 2012. It hit that, and then that started this long decline. If in fact we get any more upside, there's no really strong resistance till about $42. We haven't seen that. The last time that happened was 2011, and that's when gold hit its all-time record high. So silver's remained under pressure. Would I be a seller here? In the futures markets, maybe, but as far as I'm concerned, I bought a lot of silver at around $30, and it's just been sitting in a safe. At $36, I might consider lightening 20 to 25% of it, but I certainly wouldn't get rid of it completely because it's a very long-term investment for me. In fact, it's not even an investment for me. That's put away for the kids, and I think that 10 years from now that it will be much higher. But short term, yeah, if I'm a futures trader, I'm going to focus on whether or not this is sustainable. If it's not, I'll look to sell into it. But that's a little bit too easy because it hasn't proven that it's not going to move higher, except for the fact that it got there and for a very short term, for a couple of days, it's traded below it. I don't know that the cards are written that 37 is the top. It is a point where the institutional and professional traders would look to sell into it, but then you would have a chance to buy that dip and have it break back above it. I don't think the story is over.
What's the next level you're looking for silver?
On the upside is almost 42. This is basis of futures contract between 41 and $42, with the absolute upside being about 47.50, which I don't see as realistic
Hmm.
because then you're looking at the record levels, the highest silver's ever been. But what has been the most incongruous fact that we've been looking at is the fact that gold has made multiple all-time record highs. A lot of it had to do with the fact that the dollar went down 10% this year. But if gold went up 25%, 15% was due to traders and 10% was due to dollar weakness. Silver, we didn't see that. We got the boost up from dollar weakness, but not from traders. So on the downside, the targets I would look at in terms of support would be about 33.80. I would, if it does come down, I would look to see whether or not it can hold that level. Absolute support is got to be above $31 right now. Realize it's near 37, but those are big areas just because of the way that it has risen. The second thing I would say is whether it goes up from here or down, you're going to get extreme volatility at these new levels. Absolutely. So tight stops aren't going to work. You're going to have an interim strategy to successfully trade silver, not buy and hold.
All right, Gary, excellent insights as always. Let's catch up another time. Plenty more volatility to discuss, I'm sure. Where can we find you and your work, Gary?
Absolutely. Thegoldforecast.com, both on YouTube as well as our designated website, as well as Kitco Media. I still write every day a commentary for them. And what I did want to do is make a special offer to the David Lynn loyalists because you've been doing this for a while on your own. And
Sure.
as you correctly pointed out, we worked for years before that. We want to offer them a 30% discount off of our regular subscription price, which gives you 5 videos a day and stuff like that. Go to thegoldforecast.com and there'll be a link and a code word to put in to get that 30%. But the best ways is just to read our commentary daily, to look at our YouTube channels. Those are all free. If you think you get value out of the premium account, that's the way to do it, is to get 30% off, and that's how to get it.
All right. Appreciate it, Gary. We'll keep tabs on your work there and make sure to follow Gary in the links down below. And thank you for watching. Don't forget to like and subscribe.